10/5, 2013. It's the first weekend of the government shutdown. We're taking a look at the Dow 30 component from that top reversal that we had called for. We undercut the psychological level of 15,000. The Republican Democrats remain at a standoff over the weekend. It's about a $300 million a day negative deficit to the U.S. economy. We can say one thing for sure, that you would have to, at least for it to have any meaningful effect on the gross domestic product, called GDP, is that the government would have to go at least 14 days or longer. So it would shave off about a half a point of GDP of Q4 earnings, forward looking, that is, the fourth quarter. We are going into a major, uh, slower 2% growth. Look, the thing about it is markets were overbought. The complacency was here at 15,700. The last correction where we got that support level and got this rally in September, now we have started October. Markets needed a reason to sell. They were extremely overbought at the tops. Now they're not so overbought. In fact, they're down at levels where, as far as the component itself, with the 30 stocks that trade in the Dow, is that we're more down toward an oversold area in a short term than where we were when we were calling for the correction. So we just want to make it clear that individual stocks in the Dow 30, the leadership, are going to report corporate profits. It's upon us. It's in October. Corporate profits are going to be weaker than what they were the prior quarter and the quarter before that in the summer period. So you had the summer quarter that we came off of in July. They were a lot weaker. Is corporate of America going to blame the slower growth on the Republican and Democrat Party in Washington, D.C.? Well, we'll find out. What do I mean by the statement? Somebody always has a blame game, okay? Bottom line. And what we're saying is that the CEOs that are going to report these profits for this quarter that's starting, they're not going to be as robust as people think, because they're not. So the longer that the government shutdown is in play, the forward-looking GDP, we could lose some of that GDP. I mean, 2% is not a robust economy, I can tell you. Not only that, we did not get the Friday unemployment jobs report because that agency is shut down. So, when the Republicans and Democrats come off of their high horses, that's just the government role. And we've all been down these roles. We were down it last year in the last hour in the 11th 12th inning. They came out with the resolution. The thing about the debt ceiling that people are most concerned about, people have downplayed the government shutdown. The thing that we're going to be telling you is that the earnings and the volatility, so that's coming into play outside of all of the rhetoric in Washington, D.C. So picking off good companies, the ones that were extremely overbought, can't buy them when they're overbought, but you can buy them when they're oversold. And that once the volatility of the reporting session or the quarterly profits get out of the way, it'll be time for you to put your shopping list together in the Dow 30 and get with it. One of the things that we can say is that we haven't had a complete fear capitulation. We will give you a brief snapshot of the weekly right here. One thing about the Dow 30 is you've undercut the 10-week and the 20-week. The psychological 15,000 level is very important, I can tell you. Not only that, the last lows in the Dow 30 was down around 14,800 from the last correction. You don't buy stocks in the Dow 30 when they're overbought, because you get taken to the woodshed at the end of the day. The end of the day is that when they get down to where the individual stocks are oversold in that capacity level, that is when you want to be a buyer. You don't want to be a buyer when they're up toward the highs. Outside of all of the rhetoric, get your shopping list together. We have a weekly sell signal on the public indicator called the MACD. to percent K, which was up here at 100% before when we called that correction. We called this correction, this one, and this one. This particular correction in the Dow component is more government induced. Once again, it was you people that elected them. Now, if I were you in each state, I would hold them accountable. So the thing about it is the correction is not over. What we can say and will say that forward looking is once a correction is over, once the good companies meet or beat or lower the expectation, we're expecting that corporate of America will play the blame game on the government. Listen, growth is growth. And we don't see in this particular quarter that's going to start reporting the earnings on Monday where there's a lot of upside to the earnings. Individual stocks have ran in their bull capacity level. They're extremely overbought going into some of these earnings. But once again, do your homework and figure out which ones are ready to buy because we're going to be quite busy. And we encourage you to stay updated at stockmarketfunding.com because you want to know what ones to buy, which ones report well, which ones don't. The Dow Jones, once again, is not in that overbought level. We were up here. We have broke key technical support levels on the Dow Jones, which when we take a look at the NASDAQ composite and the S&P and the NASDAQ 100 is that this one is faring much worse technically than the rest of the indexes.